afternoon, everybody. We'll get this session underway. Let me introduce myself. I'm Grant Willis. I'm the Executive General Manager of Astron Life here in Suncorp, but also on the board of the FSC. And I'm sure panellists will be familiar to many, but I'll introduce them. So Naomi Ballantyne, the Managing Director of Partners Life. Ben Coulter, Partner at PwC. Karen Stevens, the Ombudsman for Life. And George Stavliotis, and I've practiced that name fairly often, but George is Vice President, Client Manager, Life and Health for Australia and New Zealand with Swiss Re. So the purpose and the focus of this session is to debate the different perspectives on the future of life insurance in New Zealand. And so we're going to do, we've got about an hour, and we will be trying to finish on time. But what we are going to do in terms of running the session is that I'll just do a quick overview, and then I'll turn to the panel to give a bit of a quick summary on their perspective, and then we'll sort of move into a general discussion. And what we do have is we have the questions available through the app. And I've got this little iPad here, which I'll figure out when they start coming through, but we'll certainly have a session opportunity for dealing with any particular questions that come up from the audience here. So let me kick off. As I said, the purpose of the Financial Services Council is growing the financial confidence and well-being of New Zealanders, as we've seen in the background and various things in the sessions. And particularly we want to focus here in terms of the future of life insurance in New Zealand. And we've heard several of the sessions this morning touching on current issues that potentially will shape the future of the life insurance industry in New Zealand. So first of all, Grant Robertson, he was talked to the economic resilience and growth and identified the government's concern around the underinsurance gap in New Zealand, which I'm sure we will be covering off, particularly compared to other OECD economies. He also reiterated that his government's proposed solution to intervene in that situation to close that gap was the proposed NZIIS compulsory insurance scheme. In terms of the economy, we've also just had a session before lunch from the panel of economists, which painted probably a slightly different perspective on the outlook for New Zealand, and so where and how that impacts life insurance going forward is something we can potentially also explore. It was interesting, we heard about the FSC's work on promoting financial literacy in our primary schools and the Why Money Matters initiative. But I suppose the question that I'm going to pose is it enough? And what's the current trajectory for A, literacy in New Zealand, and B, financial literacy, and how does that impact the topic we're talking about? We heard a bit about climate change in one of the sessions and where the financial sector or the finance sector is at generally. But what impact do we see specifically for life and for the life industry? And perhaps the challenge for the life industry is relevance compared to, say, the general insurance, which is very much attuned to elements of climate change. And then, as we heard, banking and investment, where they are very much seeing the impacts of responses to climate change flowing through their businesses. But for life, it's probably a little bit less obvious. And of course, we've also heard from FMA, Samantha Barris, in terms of the regulatory expectations around product value and ensuring customers understand what they actually own now and what a future product design would look like. But there are a number of other things that we've got in terms of challenges ahead of us, including customer expectations in terms of life insurance, what their needs are, how to access the life insurance, and areas of conduct and fairness around the power imbalance between often providers and consumers in terms of disclosure and some of those things that we can talk on. We're all faced with digital transformation changes, and what impacts will that have on the future of life insurance in terms of offering products and also how those products are accessed. And then, of course, there's the future of the advice industry. There's a lot of regulation flowing through that. There's advisors exiting, and there's the economics of the cost of advice and how that might flow into things like remuneration or commission. So there's a lot to cover, and we're not going to necessarily get through it all. But what I'm going to do now is I'm basically going to ask each of the panelists to just give us their perspective on what the future of life looks like at the moment, and maybe one or two of the immediate challenges in the next 24 months that they see ahead of the industry. I'll start with you, Naomi, if that's all right. We go left to right.
Thanks, Grant. First thing I need to say is I think the future of life insurance looks fantastically positive. So I know you probably weren't expecting me to say that, but it is absolutely true. We've been through a pandemic like none of our generation have ever been through before. And there are people all over the world who now know life can stop at a heartbeat, and that money matters, jobs matter, having an income matters. They also know that the public health system can't cope. So if you ever needed an opportunity to introduce risk and look after yourself, now's the best time there has ever been to be able to do that. The other thing that makes me very positive is the need hasn't changed. And in fact, New Zealand and Australia are probably far ahead of the rest of the world. We're looking at, when they talk about the future of insurances in other markets, moving away from bundled investment and risk products, which we did generation ago in New Zealand. So I'm really hopeful that more and more people will understand the need and will have a propensity to buy. That keeps our industry ticking over. The challenges are the schizophrenic nature of the world that we live in at the moment. You need to make money and be sustainable over the long term, but don't make too much money, because customers need to be able to get some value out of this as well. Make it simple, make it easy, make it fast, because that's the world we live in, but make the outcomes permanent and large and complicated and personalised to each individual person. Yeah, and sort of, but don't do it like we used to do it, where we sold direct and all sorts of people bought all sorts of bad things because they didn't know what they were buying. But get the cost of distribution down. So where they get advice, don't pay for that advice. It's difficult to figure out how all of those things come together, but they will. They will come together. We will figure this out. We've all got a long-term vested interest in figuring it out. So the challenges for me are landing on that mix of what is the right line through the middle of all of that, but the opportunity is better than it's ever been, at least in my time in this industry.
Thanks, Naomi. I'll start by going back a little bit and talking about some of the PwC Global thought leadership that came out. So we published a publication called Insurance Reimagined for 2025, and there's five key themes, really, coming up globally across insurance. There's a widening trust gap, and that's certainly present in New Zealand. So the trust in financial institutions is at an all-time low, and conduct and culture, along with waves of regulation, have really contributed to that. So we're at a low place. I agree with the long-term future with Naomi that there is a bright future, but we're in a bit of a dip at the moment. The second theme is in terms of increasing consumer expectations. So the expectations of our consumers, they want more and more. They want it faster, more digital, which leads to the third theme, which is more digital and AI disruption. So embracing digital concepts, artificial intelligence, what can you do in that space to make it easier to access different channels to insurance? The fourth one, which I think George might talk about a bit more, is really in the ESG space, so climate change, how that will impact the insurance industry, and it'd be really interesting to talk about what that means for life and health, because it's quite obvious for property insurance and the general insurance space, but not so obvious in life and health. And then the fifth one is really about collaboration. So how does the life insurance collaborate with other adjacent industries to, again, get more channels to market? Now, in terms of the life insurance within New Zealand industry, I guess the old adage is true, life insurance is sold, not bought. And over the last few years, with regulation in terms of financial advice, as well as conduct and culture, people have become nervous about selling insurance. So it's a bad thing when life insurance is sold, not bought. So I think that's kind of hamstrung the industry over the last few years. And I think going forward, my prediction is that house prices will continue to fall across parts of the country. Interest rates will continue to rise, be volatile. So I think we're going to see it's going to be a little bit tougher over the next 12 months before it gets better. But then I think as some of the debts roll through the banks, some people start defaulting on their loans. There's the NZIIS that may or may not land, and I'm sure we'll get into that later on. But I think that will create more conversations about insurance, and I think then we'll be on the rebound back up. So I think it's going to get a little bit worse before it gets better for the long term. But I think digital channels to market are the key for life insurance in the future.
Kia ora koutou. I'm Karen Stevens, and Grant described me as the life ombudsman, and I'm not quite sure if that's a bit like the Queen, that I'm the only ombudsman you're ever going to know in your lifetime, or if it's a life sentence for me, and that I already feel like I've been here for an awfully long time. The Insurance and Savings Ombudsman scheme was set up in 1995. We are now the Insurance and Financial Services Ombudsman scheme, so we deal with not only the whole of the insurance sector, but also all sorts of other financial service providers. And in the course of doing what we do, we have to make fair and reasonable decisions, which I'll go into a little bit more later. But the overriding concept is one of fairness. Now, with the new COFI legislation, already being talked about as being put into place in 2025, how is that going to determine how you all do things going forward? It will be in terms of fairness plan, fairness conduct, FMA actually having oversight of that fairness conduct. So what does it look like? Fairness is a little bit like beauty is. It's in the eye of the beholder. And what one person thinks is fair, another person might think is totally unfair. And from our experience at the FSO scheme, that is a daily challenge that we have. But you've already got the FSC code where Code Standard 9 is treating customers fairly. And what is going to happen over the next decade, effectively, is putting that into a statutory format. And we don't know quite what it's going to look like yet, and that is yet to be released. But it's worth thinking about now in terms of everything you do. And I've got a few figures to talk about today and a few stories later on in terms of trying to illustrate what that might mean for you as an industry.
Good afternoon, everyone. George here. From my perspective, I sort of think of things in three segments. I think of now, I think of what's next, and then what's later. And I guess that's part of being a reinsurer that looks at the long term. Now, I think it's very, as the panel's already spoken about, it is a little volatile. We've got, we heard this morning all about affordability issues, what that means for policyholders. I know insurers and advisors will do what we do really well and look to keep cover in place for as many policyholders as possible. Obviously now as well, being from Australia, we always try not to talk about Australia and New Zealand because they are very different markets, we acknowledge that. But we always look at what's happening in Australia and what we can avoid happening in New Zealand as well. So that's important, and New Zealand's doing a lot better than Australia. Let's just put that out there right now. Next, in terms of the next few years, we think about this protection gap. And Swiss Re did some research last year on New Zealanders, and we can talk a little bit about more of those numbers, but the numbers are staggering. And there's definitely a need there, and our view is where there's a need, there's obviously something that needs to happen to protect New Zealanders from that. We also talked about digitalisation. I think that's going to be key, and the way we close that need, the focus for us very much so, is around looking at that customer journey. How do we make it easier for people to get insurance? And we need to look at each part of that value chain. It's been done, it's been looked at many, many times, but we need to enhance that, and I think there are some opportunities we can look at that. And then later, in terms of many, many years later, obviously we'll enhance that customer experience, and I like that word that's been used in the market, is the word of ecosystems. So looking beyond just insurance and saying, Where does that customer engage in different parts of the market, and how can we fulfil that need through different parts of that market? And then finally, as has been alluded to, there's climate change. It's coming, it's happening. It probably won't impact us in the next decade. It'll definitely impact us in the next 50 and so years, but there are implications for life insurance, and we need to start thinking about those.
Thank you, everybody. And George, I'm going to stay with you because I think as a context piece, that piece of work that NZIIS did on the underinsurance gap, I'd like you to just to maybe give us the that context in terms of what that gap actually was. And then I want to just come back to Ben, because we mentioned in his research it talked about a trust gap, and then I'd like to pick up on that further. But what is the insurance gap per the study that NZIIS did?
Yeah, sure. Thanks, Grant. So last year, NZIIS conducted a survey of New Zealanders. So it's not a global study, it's actually a local study. And it was mainly looking at mortality gap. And the numbers are pretty large, as I said. So this is in New Zealand dollars. So the gap came in at $670 billion. And that equates to about half of what the, that equates to about half the gap is out there. The other interesting numbers is in terms of households, 64% of households were underprotected. And when you break that down a little bit further, it said 20% of New Zealand households have a very large gap, which was greater than 90% of that gap. So there is definitely a big opportunity here, and obviously a very large need. And as I said earlier, we're very focused on how we can do that. Low-income earners, low-income households, of course, and obviously the young, middle-aged, high-income households as well had a very large percentage gap.
Yep. Do you want to jump in, Naomi?
Yeah, I'll just add, we also did some research recently, as you know, around people's perception of ACC. And the interesting part of that research is only 13% of people have critical illness insurance in New Zealand, 13, and only 9 have any kind of income protection. So if you wanted to know what the government thought they needed to do a New Zealand insurance scheme, that might answer that question, which says that even though we've got a lot of people out there giving advice about these products, we're not getting them over the line, and that's making that gap bigger and bigger.
And that's probably a good segue, because you style, I was going to come to that piece of research you did, Naomi, but no, it's a good segue, because I think the question then becomes why, because I think what we can clearly see is there is a gap, and we've seen that for many years, and maybe an insight from that, and then I'd throw to Ben, because he talked about the trust gap. Is there a trust gap? And maybe then to Karen about what she sees as, from a consumer point of view, might be driving that.
Yeah, I think that's a really interesting point. So we can see the literacy gap. So 34% of New Zealanders think ACC will cover them for illness or chronic things like back pain. They have no idea what an accident is. They just think the government covers them, 34%. So that's not even a trust gap. That's just a, I don't need this product idea.
Yeah, I totally agree with the protection gap to start with. I'm an actuary by profession. I've done stats in the past using the residential mortgage borrowing, on the Reserve Bank stats, and clearly there's a massive gap in life insurance, but even it's an ocean when it comes to income protection. It could be 5 times larger. In terms of the trust gap, it is highly interconnected. I think there is a deep mistrust of financial institutions in New Zealand, but also there's an education gap as well. So increasing the financial literacy across the broad base of New Zealanders is really important. I was lucky enough to be on the judging panel for the FSC Awards tonight at the gala dinner, and one organisation that really impressed me was Whairoa, part of Ngāi Tahu, that's really doing a lot in terms of educating their iwi members around concepts of finance and insurance, and I think things like that, which sound small, will make a huge difference in the long term.
And Karen, that trust is so important because we're in an industry that sells an intangible promise to pay in the event of some event occurring. So what is your perspective on some of the things that maybe are going wrong in terms of that trust from a consumer point of view?
The thing is, Grant, that a lot of people don't understand the products that they buy. And so over the last couple of years, what we've seen in terms of really quite unique data that we get from complaints that nobody else can provide you with effectively, is that the top issue effectively in complaints inquiries, and the second to top issue is scope of cover. People do not understand what scope of cover they have in all of the policies, and particularly this is in the risk area, so that what we are trying to encourage everybody to do is to actually educate your customers more. Now, I know that this probably goes back to financial literacy again, but this is the thing that people are most upset about when they get to us. They have expectations or make assumptions that they're going to be covered for certain things. You know, trauma is always a great example, because in terms of some of the complaints we've had about trauma cover, people have explained to us how traumatised they have been. This has been an exceptional trauma in their life, without realising that, you know, critical illness policies will only cover the specified illnesses, and that's it. So in terms of the trust gap, yes, there is a trust gap, but it does stem, I think, also from the fact that people simply don't have sufficient financial knowledge and literacy to be able to properly evaluate what they're buying. And I don't have any answers about how you can do this better, but you've just got to keep trying, I think. And again, with this COFI legislation coming in, and the fundamental concept being having to show that you are actually involving yourselves in fair conduct, and that you have fair conduct principles top of mind, and you've got a customer-centric environment, trying to show how you have properly informed customers about the products and all that sort of thing is going to be quite a challenge, because even when we're trying to explain things to customers after they've been right through a disputes resolution process with the organisation, and then they come out to us, because of the expectations that they have, because of the lack of understanding they have, it is really quite difficult to know that even the information you're giving them is going to have them in a properly informed situation.
It's thanks, Karen. It's such a huge area, and it's very daunting, because as I mentioned in the introduction, I think there is a literacy element that also underpins the financial literacy piece, which I don't have the statistics for, but I think we've all seen media reports and probably have some concern about maybe where the state of that is. And so maybe I was going to just ask Naomi if I can turn to you and just what is, you know, to maybe take a couple of perspectives, what do you think is necessary at a company level? What would be necessary at an industry level, and then what should we be trying to partner into or to prompt government to address?
I'll go the backward forward, I think, on that question, Grant. So I really congratulate the government for thinking that we should be telling people they should be insured. If you're earning an income, you should insure that income because your life depends on it, right? Your lifestyle and your future depends on, if there's a gap, there's money still coming in while you pick yourself up and keep getting it. I think that's fantastic. It's the first time in my lifetime I've seen a government talk to people about you should have insurance. Unfortunately, they're not using those words, right? So unfortunately, but that is what they're saying. So it is, and I don't understand that. I really don't understand why, as a government, you wouldn't be encouraging people to take care of themselves when they can, so that those who can't are looked after properly. So it's good to see that. Not necessarily sure that the answer is the correct one, in my opinion, but it is really good that they are at least talking about it. So I would encourage them to talk more to people who have the wherewithal to look after themselves, to encourage them to do so effectively, because that's what they can do for New Zealand, right? If they can remove themselves from being dependent on the government, then that is very good for New Zealand. So I would really encourage any governments to talk to people about, as an adult, insurance is just part of the thing that you do. The other thing that we don't do is we let the media tell bad stories about us, because that's the only stories they ever tell. You never see a positive story about a life insurance company ever. in the press. And that's because we respect the privacy of the, millions of people we've paid claims to collectively over the many years. So they tell us how they feel about us, and then the people who don't like us, because they got to know, tell everyone about that. And we've always thought we were protecting privacy, but more recently we started talking to our clients who are claimants because they're desperately grateful. And they have been saying, I want to tell my story. I want to tell my story. So actually, as an industry, we need to get out of our own way and let people speak, because those are the stories that counter the bad news. Those are the stories that say, yes, they do pay claims, and when they do, it makes this much difference in your life. So I think that we need to turn around our talking from trying to sell a product that people don't understand in our marketing to let other people sell the product based on what it actually did for them. So those are things I think we can do differently.
George, I might just go to you just for, and I know you didn't want to necessarily bring the Australian perspective all the time, but Australia went through the Royal Commission and all of that sort of stuff. Back to the trust gap, do you have a perspective on whether that has maybe damaged the trust that consumers have in insurance generally because of the way that commission unfolded? And what sort of learnings would you see maybe for New Zealand going forward with...
Yes, we did have that Royal Commission, which everybody watched very closely, but absolutely right, there was a massive trust issue, and I think we're still recovering from it in Australia. It doesn't feel the same in New Zealand. That trust factor seems to be much greater, which is very positive. I think you need to keep doing what you're doing. Obviously there's more to be done, as Naomi mentioned there, but Australia's coming off a very low curve right now. We've had to remove products from the market, and those are the specific direct products and funeral products. A lot of insurers are no longer selling direct insurance products. It's unfortunate because it caters for a particular segment of the market that, if I take the opposite extreme, doesn't need advice or can't afford advice or doesn't have access to advice. So we've indirectly eliminated a particular segment or a channel that was serving a particular market, and unfortunately there was a few that didn't go very well. So yes, we're hopefully back on the curve, getting back up in terms of trust. And I think it is slowly getting there. I mean, we've got a very good system in Australia in terms of the superannuation group risk environment, and that is a default level of cover, and everybody accepts that, and they rely on their trustee, which is the superannuation trustee, to make decisions on their behalf. And I think that goes a long way in understanding exactly what's happening with life insurance. So a lot of things still to happen for Australia, but we do not see that in New Zealand, which is really good news, really good news.
Thanks, George. I'm just going to grab a question here that's come through. So thank you for Evan, who's submitted this. In regards to the insurance gap, can you please expand on the criteria that was used to identify this gap? And also, was there any consideration given to older age groups and what gap exists there and how this gap was characterised? Was the gap for health insurance, life insurance, etc., for example? So was it differentiated between that? So maybe that's an awful lot, but in terms of, was that gap split by demographics is possibly the summary?
I don't have those numbers here, but there was a report that I could share with whoever asked that question. Not an issue to do that. It was only mortality cover, and there was a breakdown. There was a definition for it. So we looked at also any other resources that person had to support themselves. So it took into consideration other assets, liquid assets, cash, etc., etc. So it wasn't just purely a life insurance benefit per se. So it looked at the net position that person was at and what they needed to close that gap in terms of their future protection needs.
I might just jump in there because the FSC is also doing some work at the moment on looking at growth rates in terms of insurance and starting to split that by demographics. And what's interesting is because, as we know, as people age, not only does insurance get a little bit more expensive based on premium structures that we've got in place, but actually their needs change. But so naturally there'll be a runoff in terms of the number of people that may be holding insurance. What's interesting though is at the initial first blush of looking into that, is that the new cases are coming through at the millennial and some of those younger cohorts. We're trying to look into whether that's actually decreasing in terms of what it has been in the past. So the FSC are doing quite a lot of work at the moment on looking into that, refreshing some research that was done way back in, I think, 2012. I think it's a long time ago with Massey University, and so there will be a lot that's coming through that will come to that. I just want to pick up maybe on that element of advice and where is the advice industry going, because I think if we're looking out into the future, what does that look like? We've talked, we can bring in perhaps the elements of technology change that also may be automating some of those advice, and just see where the panelists' thoughts are on maybe the future of advice. So I'm open it to anybody to leap in and.
Sure. I mean, I'll talk more about the technology rather than necessarily advice as such. But certainly, I mean, life insurance won't exist without some sort of advice in the process. You know, the needs do end up being complicated at some point. You do need that advice element. But I think there are more digital channels of getting there that need to be introduced. So what I want to see is the sharesies of life insurance, or the hatch of life insurance. That there might be, you know, small digital offerings that offer insurance in little bundles, but get people talking about insurance and getting the feel for what it's like. Maybe a slightly different coverage with more income protection focus. But things generally in New Zealand, you know, the life insurance industry has been very slow to adapt to technology. You know, in terms of adoptions of websites, you know, even just a simple thing like going online, logging into your web portal and be able to change your address. You know, life insurance companies tend not to offer that. So simple first, but then I want to see that sharesies of life insurance.
I mean, Partners Life is totally committed to trying to find a way to digitalise as much of the advice process as we can. Actually, more the education part of the advice process, to demonstrate and make it easy for consumers to understand their financial life, full stop, before you can even introduce the concept of what happens if it stops, and what insurance is there to do. So we are 100% behind digital supported advice, but we also know, in the comment I made before, there's no one client that looks like another one, even if they're the same age and the same gender, and they live in the same area, because they have different health profiles. They have different partners, therefore different family incomes, they have different numbers of children, different size of mortgages, and the list goes on and on and on. And different assets, some of them may have assets that were left, etc. So the conversation around where insurance fits has to take all of those things into account. So the simplification of things is not sensible when the need is specific and very personal. So the digitisation of the chunks of that to facilitate customers learning for themselves, which by the way helps advisors. Because if you can see it in a computer and you've put the data in and it spits the data back out and you can understand that that's you, the trust level goes up. Interesting, isn't it? Rather than someone telling you, trust me, based on my experience, that's what I think you need, which is kind of what we've had before. So I'm not sure that it is cutting people out, but I think, because people in this business buy from people, but I think that the process of assisting that, so it's consistent and it's easy for the client to understand, and it creates that trust because it's not your opinion, it's supported effectively by logic and science, will make an enormous difference.
Karen, I was just going to throw to you, and what's your take on the value of advice where you see that coming through in terms of complaints that you deal with?
Well, look, I agree with Naomi. I think better record keeping for financial advisors would help, better digitisation, so that advisors actually can have some sort of basis other than the back of a paper napkin to work things out for their clients. Because, you know, we have seen some shockers, but, you know, you might be surprised to hear that we have very few complaints about financial advisors, despite the fact that we've got about 4,000 in the FSO scheme. And the reason for that, usually, that we can see is the relationship. There's a very strong relationship between financial advisor and client, and sometimes it can go wrong but more often than not, they do help in the process in terms of getting somebody into the right product at the right time. And something that I just wanted to share with you, that when I came up from Wellington on the plane last night, there was a very impressive young woman who sat next to me, and we got into a conversation, as you do, and we were talking about what we did for work. And when I said I was the IFSO, she said, "Oh, do you deal with any mental health issues in relation to life insurance?" And I said, "Well, it's not really our area." I said it's more a human rights thing if you can't get what you want in terms of life insurance. And she said that she had gone through a broker. She had diagnosed bipolar syndrome after she had her first child, had an existing policy, and I was almost going to say, no, don't tell me that you actually changed this policy, because of the non-disclosure aspect. And she said she did, but she said that the advisor, she had to because of the level of support that they needed in terms of the life policy. But she said her advisor took her all the way through it and talked to her about disclosure going forward and all of the pitfalls. And I just thought it was such a good example from what she told me of what had happened in the process, and that sales process where obviously the trust level was pretty high, and she felt that she had been heard. And that's a major thing with the complainants that we have, your customers who don't feel that they've either been heard or involved in a process. So to me that was a very positive story, but actually just a comment on that too, pitching it out another 5 to 10 years. What will the life insurance industry do about customers who do present with mental health issues, diagnosed issues? Will there be better products or more availability or accessibility for them? Because at the moment I think that's a gap, and there is nothing at the IFSO scheme that we can sensibly do about it. But I raise it as an issue in this forum, talking about the longevity of life insurance and where we're headed.
Karen, that's probably a segue, and what we're talking about there partly is risk and affordability, I think. And there is a question here from Erin that there appears to be a reasonable number of Kiwis who find it difficult to insure for trauma or IP due to their health or BMI. A huge proportion of these people also would not earn a wage sufficient to cover extra premium. Do you have any thoughts on this issue and how this fits into the insurance gap, and how can we do better for these Kiwis? And I'll pose that question and ask it. I think probably the follow-on question for that is the compulsory insurance scheme for that has been proposed an answer to that, or is it going to make things worse? Naomi, you're desperate to answer, I can see.
Yeah, so affordability issues are absolutely heightened, and they've become more heightened because we as an industry have been very good at enhancing products competitively. We have done that competitively over a number of years to the extent that the product experience is pushing the prices up, right? So we can't take it away from people, don't want to take it away from people, but the prices are going to keep going up if the claims experience continues. So the industry has been hard at work introducing different versions of products for affordability, and Partners Life has got some trauma options and some income protection options. They do what they say on the tin, they just don't do the extra stuff. And advisors find it difficult to sell them, but actually these are exactly what they're designed for people who are lower socioeconomic, affordability issues, or even people who, because of loadings, now the mainstream or the comprehensive or the richer, or the product that has over-insurance built into it has become too expensive. There are already options. Advisors need to take them into account, because I think there's a fear that if I sell you that, I'll get into trouble because it's not the full flavour thing, and someone will say, why didn't you sell them the full flavour thing? So I won't sell them income protection at all, and I'll just give them some trauma. There are very few people who are declined. I have to say that. So income protection, it's generally an exclusion. Trauma might be a loading or a removal of provision, but some cover is pretty much always available. And if it's expensive, there are affordability options. We just haven't been very good at getting advisors to adopt them, and we need to do more in that space because it's only going to get worse.
Which kind of feels quite circular because that brings us all the way back to understanding, because to get to a lower cost acquisition model, you'd want to actually have a digitised or a automated process for people to access. But then again, then you run into the understanding issue, because these things are actually quite complex in terms of the conditions they cover. What I was, there is another question here which I'll just touch on. Ben, do you want to make a point first, and then I'll pick the question up?
Yeah, just about the NZIIS. I mean, I think I agree with Naomi's point that it's a good scheme in concept, a bit like the NZIIS in Australia, but just poorly executed. You know, it's come across, I guess, to implement this, they've gone down a minimal viable product type solution mode and come up with a handout rather than a hand-up. What New Zealanders really need is when they fall on hard times, when they're not able to earn their income usually, they need that transition back to work, and it's really that rehabilitation in those early months is critical for everyone wins in that case. You know, if everyone's back at work, they're more healthy, happy, and that's what we need. So we need the change of the NZIIS to change its focus a little bit, to be more a hand up rather than a handout.
Kind of along that theme, but I do want to come back to the NZIIS, and we do need to watch the time. We've got 15 minutes left, but Matt has raised a question which I'll direct to George, because of the experience again in Australia, but also from a reinsurance point of view. Will agreed value income protection products remain on sale in New Zealand, or will we follow Australia's example and remove them?
Well, I guess it's up to the insurers in the market here. I mean, we removed them in Australia for legitimate reasons, I guess. And I guess at the moment, if the experience is tracking okay, it's not indicating anything as such in regards to what's happening in Australia. So there isn't a view at the moment to remove it by any means. But you know, we'll have to monitor that as an industry, as a market, not just as a reinsurer. We work very closely with our clients, and we take their lead in these things. But Australia had a very unique situation, so you know, I'm always very conscious of not just simply bringing whatever was in Australia into New Zealand, because it's a very, very different market, very different dynamics, and one does not lead the other, or the other way around.
Thanks, George. I want to just come back to the comment you made there, Ben, around the proposed scheme being a good one, because I think there are some constraints, and you've mentioned a minimal viable product element to it. I wonder whether having it placed into an organisation such as ACC, given some of the confusion that already exists with ACC and what their function versus insurance is, and the health aspects, that would be infinitely more complex than some of the things that they deal with now. Just to clarify, are you saying that the scheme would look good if it was a compulsory scheme? Because we understand affordability, the greater the pool, the better chance you've got of making these things affordable. But are you saying that the actual design of the scheme, run as a government scheme or ACC scheme, is a good model, or are you saying the scheme run in a private partnership, maybe private-public partnership element, would be the way to go?
Yeah, I mean, I think, you know, having the bulk of the responsibility with ACC completely makes sense. You know, some of the ACC claims are long-term income protection type claims. They're used to that kind of claims management, so I think it logically sits with them within government. I think it has to be compulsory, but I think there needs to be some connection with the private insurance market, because what I'm concerned about as an actuary, there's this kind of anti-selection risk. What happens after that 7 months? They've been on claim for 7 months, flicked to the private insurance sector. It's going to be really tough to rehabilitate anyone, and it's just a lose-lose for the industry as well as the consumer or the New Zealander at the end.
Okay, no, very good. There's another question here which I'll just get to. What advantages would digital advice bring to compliance in an advisor's business? From Stuart. Naomi.
I think it means that you would be able to demonstrate the logic that has been applied to each client, provided that digital advice platform has logic built into it. So when I talk about logic, it says if a client looks like this, then this is what applies. And so all clients who look like this, that's the advice that they'll be given. I think that that's an important component, that the digital advice actually gives advice based on that client. To be able to demonstrate that it is not opinion, that is science and logic, I think is an enormously important part for an advisor. And also the digital process means that everything is recorded, filed, your document keeping is much easier. So from a compliance point of view, you don't have to worry about trying to find that email that client sent you that said that they thought that this was a good idea, because it's all just part of the flow process. So from my perspective, for an advisor, it's an essential to have digitised significant chunks of the advice process.
Great.
Great. I was going to say on that, I think there's massive advantages. There's other markets where they've been able to implement digital processes from an insurer's perspective. And what it does is it attracts a lot of advisors, because I think we all know advisors want to, like any business, want to make sure that that process is as simple and as straightforward and as effective as possible. And the insurer that nails that straight away is going to attract a lot of business, obviously subject to the offer that you have on the table, of course. But I think it's critical, and I was really interested to hear that, I think someone said earlier that digitalisation in New Zealand is a little bit behind. Other markets have progressed a lot, and there are tools out there that make it very efficient for advisors to onboard customers. Of course, the underwriting process is complicated and the products are complicated, but if you can get a large percentage, and I don't know what that number is, it'll vary through the system and through the process effectively, and get cover for customers and get advisors running their business. Also, once the policy is on board, managing that policy ongoing, I think, is the other critical aspect that we miss sometimes, I guess, forget. We focus on getting them on board, but servicing them ongoing, I think, is also a key differentiator. So I think a really big opportunity, and I think a lot of growth.
Karen, just on that, we know that insurance products last for a long, long time, and we know that we can't cancel them once they're cancelable at the customer's wish, really. Do you have any perspective on what the industry should be doing in regards to, say, the legacy insurance policies that might have been sold 20 years ago, which we're still servicing, to George's point, and what we should be trying to think about in terms of what that should look like in the future, particularly under a COFI situation?
No bright ideas on that one, I'm sorry, Grant. But we do have, from time to time, complaints about legacy products in the sense that they don't do what the person expected them to do, or they want to shift to a different product, but they can't, because of health and lifestyle and everything else has changed what they're able to get at that stage. So we do have complaints like that. I think that the interesting thing, if I can just walk away from that legacy product thing for a moment, is to say that complaints in the life sector have gone down markedly over the last 4 years, and it's looking like 2022 is going to be our lowest year in the for life sector complaints, which I think is quite interesting. So whether or not it might come out of a legacy product where somebody doesn't get what they're expecting, or they want to change, or it lapses, or whatever, it's going to be interesting to see what comes in the next few years, particularly with COFI and that fairness overarching principle in place, I think.
Great. I'm just conscious of time. We've got about 7 minutes left. I did want to just, we'd mentioned climate change, and I think it's probably, as I was reflecting to somebody in one of the earlier sessions, it's less climate change, more ESG. But George, did you have a perspective on climate change that you wanted just to bring through, and then and anyone else just to jump in on where you think the life industry needs to be in regards to ESG, maybe in the next couple of years? Yeah,
not so much a perspective, I guess, because it is very early days. But Swiss Re is spending a lot of time understanding some of the impacts, and I think there's probably three main things. There's obviously heat, obviously temperatures rising, air pollution, and also then transmissible diseases like vector-borne diseases moving around. So I think that's where we're focusing on. The issues aren't different, so there's going to be, there's predicted to be increases in cancers and cardiovascular, respiratory conditions, And all that means is obviously high number of claims. People are tracking now the number of days above 35, and I think if those who are sort of following the UK, they had record heat over there, and what that was doing to their public hospital system, number of people being sick, and where does that translate into claims potentially, or disability claims. The other interesting one is around mental health. Now, as you mentioned earlier, we talk about floods and storms, and you obviously have them here, we have them in Australia as well. The frequency of that, so we've had regions that have had more than one flood in a year, for instance, and it's doubled and tripled. The impact on those people who are impacted in terms of their mental health is obviously something that we need to start looking at as well. So I think the issues are still very new. We're sort of predicting this thing to sort of happen after 2080, so beyond my lifetime, but our children, our grandchildren, and we're starting to look at what are some of those impacts. The seasons are changing. Summer is getting longer in some places, winter's getting shorter in other places, etc. In New Zealand, we've got a pretty good climate, so we're not expecting it to hit 50 every day. But other parts in the middle of Asia, for instance, where they're already quite hot regions, the impact to elderly people when that temperature rises even just by 2.5 degrees is going to have a profound impact on what happens to their health. And obviously that translates to what we do in life insurance, in disability insurance as well. I might just stop there, just in the interest of time, if there's any other comments.
Yep.
Thank you. Picking up on that, and also what Samantha Barris had to say this morning about being much more cognisant of vulnerabilities. And it's not labelling somebody as a vulnerable customer, it's looking at people through the various stages of their life and seeing what vulnerabilities might come up and having a policy in place and actually putting it into action, not just having it as a policy. That's critical now, particularly looking forward in the next 5 years to COFI being in place and the fairness aspect of it all. And one small advertisement before I hand off is that what the FSO scheme is trying to do also to help its participants is to put out guidance about what fair and the fair and reasonable principle means, and that'll be coming out after our annual meeting tomorrow. So again, all of this is in the environment to assist the life companies to actually put the customer at the centre of all they do, and to be able to demonstrate in terms of compliance to the FMA that's what your business is all about.
Just to pick up on George's point as well, New Zealand might become a very attractive place to live for people who are displaced from other countries. So that potentially has the possibility of increasing our population, potentially increasing the pool for insured lives as well.
All right. Well, we're just about there. Ben, did you want to? Any other? What I want to do was turn to one final comment from each of you, but if we can do that. So this might sound a little bit too aspirational, but could I get in maybe 30-second bites from each of you? What would be the one thing that you would want to say about the life insurance industry in New Zealand, looking forward 3 years, that says we've been successful in addressing some of these issues?
I think that we actually start to see more than 2% growth. Yeah, so if we sort of have a reasonable level of growth, then it means we've probably ticked off all of those things that we've talked about.
Thanks, Naomi.
Yeah, I think growth in the context of number of lives covered, making sure number of lives covered is increasing, so not the most cover, but it's some cover for more people would I think, mark of success.
Taking a completely different perspective, I would like to see fairness not just as a concept in conduct or a principle in conduct, but a reality in the next 5 to 10 years.
I'd love to see New Zealand be the first country to create a new digital solution for customers who don't need advice.
That's certainly aspirational too, George, and no, I'm sure that. Well, look, that sounds very much. We've traversed quite a bit there, but I think from an insurance gap, addressing growth, from an understanding and a perception of fairness in terms of both the industry but also in the minds of consumers, and in terms of maybe our catch up in terms of digital and the way that we can create better access to our products through digital change. Is probably how I'd summarise that. So I'd like to thank all of our panellists and for your attention this afternoon. So I would just wonder if you could give a round of applause for the panellists, please. Great, thank you everybody.